Hello, mic test. Hello, guys, and welcome to the 61st edition of the Trading Opportunities webinar. This is Nirav, and okay, so audio looks to be working fine at my end. Let me start off other things. Yep. So, guys, let's start off with the usual disclaimer here on screen, suggesting that there it is, suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing, you yourselves will be liable for your profit, loss, or loss of profit. Right. 1 second. With that out of the way, let me give you a very quick small introduction here. My name is Nirav, and I've been conducting this series of webinars called Trading Opportunities webinar, where I've been presenting my views on the markets, on basically all the major markets since quite a long time. Currently, we are in the 61st iteration of the series, and we are going live every Friday at 2 p.m. GMT. So in case you want to join in live and ask questions regarding our analysis, you can always join in live at the mentioned time. And before I proceed, here is the YouTube channel where we are broadcasting live, also followed by the LinkedIn stream simultaneously running. If you want to check any of the past webinars, you can always just visit the YouTube channel handle at the rate of 50 EYES and just click on the live section, because that's where all the work is present. So in thus far, we have done 60 of these. This is the 61st, and in the past 59, we have got 71 big trading opportunities or big moves. Here we'll be seeing what happened with our discussion in the 60th webinar. And also, before proceeding further with the actual content, I'll just like to quickly point out that I have a track record of all the past webinars and the videos that I have published thus far, and it stands at 80% plus for 6 consecutive years, which is above all industry standards. And you can always check the spreadsheets yourselves. It's taking some time to load up, but everything is mentioned here: the webinars date, the instrument discussed, and what happened, is the video link, etc., etc. So keeping it short, let's now head over to our first discussion, which is going to be the chart of Euro USD. Here on screen, what we see here is that last time when we discussed, let me just quickly give you a rundown of what I was thinking. Last time the analysis was that this was the air down, and I was under the impression that this market will take resistance on this trend line, this CN color trend line actually. Right? And the idea was that what we will see is something like this. This was the line. Yeah. So we were expecting that this market will keep taking resistance at this CN trend line, and eventually it will go lower, and it will be what we will call a zigzag pattern, something like this. It did go lower, but not as a zigzag pattern. In this particular case, what you see is a flat structure in performance, or in the price action, I should say. So what really is happening is, there, instead of taking resistance the trend line, the market did trade above it, and has gone on to form a corrective wave B here, and possibly a C complete already as a possible ending diagonal, right? In which case, if the ending diagonal is really complete, we expect more upside. And also, I have the secondary bias that this correction might be becoming more complex, and perhaps this B is still extending in time, which again is suggesting that more upside is in play, or is going to be in play very soon. Long story short, I personally think that whichever count is playing out, it doesn't really matter. we will be much more interested in going long here rather than going short. Conservative setups would be near the high or actually near whatever this is, 1.1089 something. Check it at your end because every data feed will have a little bit of a variation. I'm using this data feed, so yours might have a different level perhaps, right? But as I was saying, conservatively that's the level, but aggressively we will look for taking short term longs or scalps or possibly intraday trading opportunities. Let me quickly remove this thing. Yeah. So I was saying we'll be looking for intraday trading opportunities as soon as this market closes above this yellow trend line. So overall, Euro USD keep in the watch list. Very good possibilities of trades forming in it in the upcoming sessions, and upside is our bias. And also, I do see people are in the chat. So in case you are interested in asking questions, uh, you can post them on Euro USD, and I'll just check them and get back to you. And it will be nice if you can also confirm that you were able to understand whatever I'm saying here, so that I know the pace is right. So moving along, next chart we'll be discussing is WTI's crude oil, West Texas Intermediates crude oil. Last time when we discussed WTI crude oil, we were under the impression that perhaps the market was forming on some sort of wave four, and by wave four, we basically were in the expectancy of this kind of account. Sorry, this kind of account, and this leg we were counting down as a possible correction. We had some targets. We were expecting that near those targets, if the market reverses, we will consider that count valid. Otherwise, not. And as it happens to be the target near which we were expecting reversal was around 77.12 something level. So clearly the market did give a very small pullback, but eventually failed and did continue the downward movement, suggesting that this is not a wave four. And what is it doing then? Then currently I'm under the impression that this market has established a low over here near the price level of 64.25 roughly speaking, and from there on we seem to have completed an impulse in the other direction, which we will let's just call wave one. And wave one will be followed by a possible 50-60% retracement in three waves correction, which seems to be the case here, right? So if this really is this 50-60% retracement, and if I zoom in, then this is the target region. Nothing new or fancy about it, and we have already touched the bare minimum, which is 50%, around 73.864. Next level will be coming in at 71.618. Right, generally what I see is that these levels will be touched. The 61 level generally is touched. So based on that, I'm on the side that once this market continues sideways or a little bit up, we can see more downside. And at the same time, if this market crosses any time above this green channel line, or let's say trend line, then we'll be looking for long opportunity on this counter. So what I'm going to do is just push a quick alert here. So that's what we are really planning on this counter. Wait for the market to continue and complete the downward movement. And for upside, we already have the setup well planned. So long story short, short term wise, I'll personally will be looking for possible selling opportunities on this counter. And in case I'm wrong, the invalidation level is very clear here. With that, let's now head over to our next chart of gold. Now this one has worked out really well compared to the others. This is sort of following the count picture perfect, or to the point, I must say. So what is this really doing here? Let's just quickly get an idea of what we discussed in the last webinar. Last time when we were discussing this chart, I was, let me just actually check the time and price. So last time was 21st of April. So the market was somewhere within this range on 21st of April when we were discussing it. The idea was that this market was doing something like this, an A down, possible B up complete or continuing sideways, and then should be followed by C down. So what comes out to be the case is that the B was actually continuing sideways. I think that was the main count last time as well. So in this particular case, I think that B might be continuing as a possible triangle, which may have either completed already here, and if not, then it can go up as well. So let's just quickly put that into the actual chart or the actual picture. Hello, Fraser. Welcome to the chat. Nice to see you here again. So what I was saying was, getting back to the discussion, that I am expecting that possibly there might be a triangle under progression here. So the thing is that if the B was complete here, then you can consider the C complete here. So this gives the possibility of a straight up movement, right? But it's not as simple as that. We also have some target levels which we generally expect the market to touch. So currently our immediate target is coming around 1946. It has not yet been touched. So if the market had touched it, we would have been more interested in taking longs right away. Since it has not been touched, we will be waiting and watching for the longs. Currently, the main count, which I think should be the main count, actually would be that this is the A of the triangle, this is the B of the triangle. Perhaps the C is continuing. If it's complete, then this could be the C, this could be the D, and this could be the E. So long story short, this could be the triangle, something like this, which could then lead to a downward movement, because this is the A of the zigzag, B, and then C down. So basically, if the market has to fall down, it is possible that it has completed the sideways progression and it is all completely set up for a fall. Where do we find ourselves taking shorts? We will only be interested in shorts below wave below, or let's say near the low of wave B, which is exactly at 1970.82 on this data feed of FX. So keep in mind the data feeds I use are listed over here. The data feeds you use will have a possibly different level. So just keep that in mind. So I'll just quickly place an alert here. So if the market goes below 1970, I'm looking for selling this market or selling this market short, basically. Let's look at some other possibilities here. Let me quickly cancel this and erase some of this. Second possibility is that perhaps the wave C may be continuing. It's a sort of less likely scenario, in which case it can go a little bit up, then D, and then E, and then it will give the fall. Now, see, the cool thing, or not the cool, the simple thing here is that even in that scenario, the market is going to go sideways, and then it will eventually have to break the 1970.82 level before giving us the sell signal. So we are on the short side quite well prepared here. The level is quite well set, no matter which count the market is following. So gold is interesting market and an important market at this point. Keep it in your watch list for sure, and put those alerts and keep analyzing it from time to time. It might, or it should be giving good opportunity very soon. So short setup very clear, and long side, if we are wrong, we will know if the market crosses about 2040, and we'll be very much interested in taking longs. And do keep in mind, for the short setup, the break of 1970 is what I'm thinking of as my trigger for selling, and 1946 as immediate target. Further on, if the market continues the fall, then we can have 1918 and 1890 as our targets. But I'm not going to be that optimistic. These targets are only discussed in, say, in case you are trading multi lots, let's say 10 lots, and you book out 8 lots or 7 lots around 1946. Leave the 2 3 lots for the possibilities of being lucky, while keeping your stop loss below your entry. So basically a free trade, right? Hopefully you got my drift here, what I'm talking about. But overall, extremely good setup for gold. And now let's head over to S&P. And guys, if you have any doubts or questions, do please type it in the comment sections, or you can just type in clear or understood or something. This is after all a live webinar, and I would like to keep it more interactive. So as the title of the webinar was SPX at deciding levels. Thank you, Fraser. So SPX at deciding levels. So why have I given that title? Because it looks like the market has decided the level for, not decided, it's decided the direction actually. Now, what am I talking about? See, previously we were discussing this count where the possibility of a triangle existed. Now, I did mention very clearly that if there was a triangle, it should respect this white resistance line or trend line, right? And secondly, if it's really a triangle, it should not cross higher than the wave CI, which is around 4196. Right now, what has happened is the market did go above it once, which is quite all right. Did go down, and then it has gone above the white trend line again. And this time, it seems to be doing that with quite a momentum. So it looks like this triangle count is relegated. So now, what is the actual count we think is the market is being following? We have discussed, by the way, this one in quite detail previously. And by the way, I don't recall if we discussed this down and then up leg. We must have. We actually, I think, did spot this down leg. Although I will have to confirm it for the record purposes, but I think we spotted this downward movement and this upward movement was actually posted in the group as well. So I'm not sure the webinar. Yeah, it was much after the webinar. So yeah, this one was only captured in the group, but this one we did discuss in the last webinar. So yeah, as I was saying, then if it's going up, what is it really going up as? So in that case, what we think might be happening is we are taking this as our point of reference. The price level is around 3492.72. And we have already discussed this count as possible 1 or A up, and this is 2 or B down as a flat, right? In case the 2 or B is complete here, we expect the market to go up, and we have already done the count for it. Our count currently stands that this is a 1 up, 2 down, 3 up, 4 down, and 5 up. Let me just put it here like this. Dots here for a lower degree. Now there are multiple ways this can be changed, and also the small amount of time wave 2 is consuming compared to the larger amount of wave 4 also suggests that this count might need a redone, or this count can be done better. But as such, I'm not really very much concerned because this, after all, is an important resistance level anyways, and the market can very much go above it and then fall below it, go above it and fall below it, and do some sort of drama here. That's quite common at possible resistance levels, or it may just even break through it, right? Both things are possible. So counts here are less important. What is more important is the direction, and the direction seems and the momentum seems to be suggesting upside here. So you can say that this was maybe the 4 here, and this was the 5 here, right? And this is a wave 1 of a lesser degree, 2 lesser degree, and 3 lesser degree, whatever, right? You get the point. We are expecting more upside. The count maybe this, the count maybe that. But intraday wise, short term wise, it's actually already along, right? You can already see the momentum building up in it. So short term, very short term wise, I can see myself taking some scalps on this counter after the discussions actually. So do keep this on the watch list alongside of gold. Okay, they both are performing really clear price movements, and possibly, not possibly, I'm pretty sure they will lead to some very clear trade setups, short term as well as swing. So guys, let me know if there's any doubts, questions, or queries before we head over to Nifty followed by BTC. Very quickly, let me check. Where is Nifty? Yep, there it is. Fraser. Nifty is 18. So guys, Nifty, last time when we discussed it, we had this count that this was a wave 3, then it was going sideways for a wave 4, and it will possibly head up for a 5. Actually, remember these arrows. Actually, maybe they were not discussed at the time of the webinar. Yeah, so let me just quickly conclude what we were discussing last time. One of the main themes we had was that Nifty had this low around 16,832, which was Fraz, I think you have missed the point. We already discussed the triangle count in S&P, the bigger triangle, if you are suggesting that. And we have been following that count for quite some time. So if you are interested in more detailed analysis, you can just check one of the past webinars. So yeah, anyways, coming back to our discussion on Nifty, what I was saying was that 1, 2, 3, 4, 5, right? And we already were under the impression that this is continuing sideways for a 4. So if this really is a 4, then it will just go up. And our analysis, I think, if there were no alternates, then basically it was that wait for sideways to a little bit lower movement, which should be followed by an upside. So basically, this does lead to us getting an actual trade. By the way, let me just quickly update the number of trades that we have caught or movements we have caught thus far. So yeah, as I was saying, we already were expecting this upward movement, and we did discuss in the previous webinars, right? And as such, this market has gone on, and currently, what it looks like is, let me delete this past discussions here. Currently, what it looks like is that this might be doing something like this, right? Still bullish, just some correction is possible, right? And how would we know that it is inside wave 4? Well, we definitely want to see a break below this green trend line, right? This one. That would suggest that possibly the wave 4 is about to get completed, and we already have the target levels around 17979, and next one at 17907, and between 17929. So if it really is a strong bull trend, we do not expect it to go lower than our first target. That generally suggested that the trend is quite intact, right? So after this short term swing, a bigger correction might come into play. But since the strong trend is really strong, we don't really want to discuss that as of now. So Nifty bulls continue to take the markets higher, and we expect more upside to be, or more higher levels to be seen by this market after a very minor connection. So the B going more sideways to put it into a D and E in the sideways action. Let me actually check what you are talking about here. B going more sideways to put in a D and E in the sideways action. What B are you suggesting? This B? Making a triangle? That's a possibility. Let's check that. Yep. You can say that this is the A, lower degree A here, a triangle, B here, C here, D here, and E either complete or continuing, but actually it does look like complete to be clear here. And the confirmation in this case comes at the break of wave B high, which is roughly around 4197. So yes, it sort of leads to similar conclusion that we expect the market to still go higher. Well, actually, the breakout level is also the same as the bigger picture triangle. Yep. So not much relevant to our case, and honestly, it does not really seem to be a very good triangle. I will have to check a few things here. Nope. I don't think this formation is a triangle. It does not seem to be following the guidelines which I use for triangles. So anyways, hopefully that clarifies your doubt. And yeah, guys, also if you have any doubts on Nifty, do let me know as we sort of jump to the other chart very quickly. Okay, then in that case, let's head over. I do not see any doubts here. So let's head over to our last chart. Where is it? BTC. So BTC, last time when we were discussing this chart, the view was very clear. I suggested that this market can continue sideways, actually more bearish. That is, the correction was still remaining, right? And we were not interested in any longs whatsoever as long as the market was below the last recent high, which was around 30916, roughly speaking, actually 31,000 something, 31,015 something. So the market is still below that level. It has not really done much to go and complete the correction. Neither has it given us a very clear long setup, which actually will be the market trading around 31,000 something level. So long story short, it is still indecisive, and as far as the counts are concerned, we are looking at something like this. This is our POR or point of reference, and we are expecting that the market will continue sideways. I'm personally thinking most likely a zigzag, but who knows? This count itself is not looking very clear, so maybe we will need a recount. But the trade setups are very clear. No longs as long as the market is below 31,000, and expect possible downside setups because we are expecting a sort of zigzag movement. So we can take shorts or look to take shorts, I should say, below 27,200. Excuse me. One important thing I wanted to check here. I think we have discussed it previously. Yes, so the point was that if this is our point of reference, then there is a possibility that this market might be heading for a dive deeper. So the counts would be A up, B down, and C up, completing a flat correction. And once the flat is complete, the market will continue in the last known direction, which was downside. So that count is still valid, which is super bearish. It can go to extremely low levels in that case, and we do not have any confirmation for it as of yet, and no clear reason to take it as the main count either, but just something to keep in the back of your mind because it has not been relegated as of now. So nothing new to add here. Bitcoin same as last time, and still a wait and watch. So let me know, guys, if you have any doubts, questions, or queries here on this last chart. If not, we can conclude this webinar. And yes, before we do that, do make sure to share it with your friends or colleagues who might find it of use, and join in next time. And of course, do not forget to hit the like button. If you have not done that already, do it before leaving the webinar. Okay, guys, that's about it. I'll see you in the next one. And yeah, guys, thank you for joining in, Fraser and Fraz, and other participants who are not really that active. I'll see you guys next time.